Every time you use a bank, they make money. Not a little, a lot. And the craziest part, most people don't even realize it's happening. You get paid, you deposit your check, you use your debit card. Maybe you swipe a credit card. Maybe you overdraft by accident. Maybe you carry a balance just for this month. And the whole time, the system is quietly pulling money out of your life. Not with one giant hit, but with tiny, repeated cuts. And if you don't understand the game, you can spend your whole life working for money, while the bank makes money from you. Meet Alex. Alex is not lazy. He works hard. He saves when he can. He does what everyone says you're supposed to do. He gets paid, puts his money in the bank, uses the bank for bills, sometimes uses a credit card, sometimes needs a loan. He's doing everything normally. But somehow he still feels broke. His paycheck disappears fast. His savings barely grow. One bad month turns into debt. And no matter how hard he works, the bank always seems to win. That's because Alex thinks the bank is just a place where money sits. It's not. First, fees. Monthly maintenance fees, ATM fees, wire fees, transfer fees, overdraft fees, late fees. Individually, they look small. $8 here, $12 there, $35 because your account slipped negative for a day. Small enough that most people shrug and move on. But that's exactly why they work. Because banks don't need to take a lot, they just need to take it consistently. One fee feels annoying, a year of fees feels invisible, 5 years of fees feels normal. And normal is expensive. Think about that. Even after years of public pressure, even after fee cuts, the industry still pulled in billions. So when Alex gets hit with a small fee, it doesn't feel like a big deal. But to the bank, multiply Alex by millions of customers. That's not a mistake. That's revenue. Now let's talk about the biggest illusion in banking. When you deposit money, most people imagine it just sits there, safely waiting. But your deposit is not just sitting in a digital box with your name on it. So Alex puts money into savings and feels responsible. Meanwhile, the bank takes the pool of money it controls and turns it into loans, credit lines, mortgages, and other assets that earn interest. That's why your savings account might pay almost nothing, while somebody else is paying 7%, 12%, 20%, or more to borrow. The spread is the business. You lend the bank your trust. The bank lends out money at a profit, and the gap between what they pay you and what they earn from lending. Credit cards, personal loans, auto loans, home equity loans, late payments, penalty charges. Debt is where temporary help can become a long-term transfer of wealth. Because if Alex uses a credit card and pays it off in full every month, the bank still makes some money from transaction activity. But if Alex carries a balance, now the clock starts. Interest stacks, minimum payments stretch time. One missed payment can trigger fees. A short-term convenience becomes a long-term drain. And this is the part most people miss. Banks do not need you to fail completely. They just need you to stay stuck. Not bankrupt, not broke in one day, just permanently behind. Just paying enough to keep going, just carrying enough debt to stay profitable. That's why debt feels so sneaky. You earn money, you spend money, you borrow money, you pay interest, then you do it again. And after a while, it stops feeling like a bad month. It starts feeling like life. So when people say, "Why does it feel like I can never get ahead?" This is part of the answer. Because if you're always paying interest on the past, it's hard to build anything for the future. Here's the brutal truth. Most people are not broke because they're stupid. They're broke because nobody taught them the rules. They were taught how to work for money, but not how money systems work on them. So they think,
a savings account means progress. A credit card means flexibility. A loan means relief. A minimum payment means I'm handling it. But the bank sees something different. It sees deposits as funding. It sees fees as revenue. It sees debt as yield. It sees your financial habits as a pattern. And if your pattern is earn, spend, borrow, repeat, then your money keeps moving, just not toward you. That's why two people can earn the same paycheck and end up in completely different places. One person uses the system blindly, the other learns where the leaks are, and once you see the leaks, you can finally stop bleeding. Now, let's be fair, banks are not your enemy. They store money, process payments, make loans possible, help businesses operate, keep the financial system moving. The problem is not that banks make money. The problem is when you don't understand how they make money from you. Because if you think the bank is your financial coach, you'll play the game wrong. Banks are not your friend. They are a business. And the moment you understand that, you stop taking it personally and start getting strategic. Here's what smart people do. They avoid unnecessary fees. They choose accounts that don't quietly punish them. They use credit cards for convenience or rewards, but they don't carry balances that grow into chains. They keep cash reserves, so one surprise expense doesn't turn into high-interest debt. They make their money work for them, instead of leaving it parked where it earns almost nothing while borrowing at expensive rates somewhere else. They don't fight the system emotionally. They learn how to win inside it. Because the difference between staying broke and building wealth is not just how much you earn, it's understanding how money actually moves. If you want to master money, start by understanding the game. Because once you see how the system works, you stop being the product and start becoming the player. Subscribe, and I'll show you how to win it.